This is Economy Watch, what you need to know about New Zealand's economic life today. Brought to you by interest.co.nz.
Kia ora and welcome to Thursday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston and this is the international edition from interest.co.nz, and today we lead with news. Our meat exports to China face tough conditions, and it's not just from competition from excess Aussie lamb supply. But first, US mortgage applications rose 3.3% last week, even as benchmark mortgage interest rates rose themselves to 7.13% plus points and a 4-month high. A month ago, those were at 6.84%. But to be fair, the recent shift higher in application levels is still 10% lower than the same week a year ago. So last week's rise is hardly significant. Today's US Treasury 20-year bond auction was another success with the usual excess demand. But just like the mortgage market, the median yield rose again to 4.77%, up from the prior equivalent event a month ago of 4.50%. It seems investors are prepared to accept a lesser rise than they want from home loan rates. Despite these rising interest rate levels, the Fed's Beige Book survey paints a picture of a moderate to broad expansion in recent activity in the country, consistent with other data. They said overall economic activity expanded slightly since late February. 10 out of 12 districts experienced either slight or modest economic growth, up from 8 in the previous report, while the other 2 reported no changes in activity. They still found an expanding labour market, and the economic outlook amongst contacts was cautiously optimistic, they reported. While most blue-chip professional economists think the US economy is expanding at about a 2% rate, the Atlanta Fed's GDP Now model, ingesting current data, thinks it is much faster than that, near 3%. It is an expansion that is driving the global economy, including that of its rivals like China. And Japan is on a roll. Despite their currency issue angst in US dollar terms, their exports rose by 7.3% in March, following a 7.8% rise in February. It was their 4th straight month of increase for them. In China, meat prices, especially pork prices, are in an extended slump. Pork accounts for almost 2/3 of Chinese meat sales, and you will recall prices hit a peak in October 2022. But it's been all downhill since, dropping 40% and putting producers at increased bankruptcy risk. It is a crisis that has national attention, even international attention, because feed grain imports are falling. Soybean prices are down 23% from a year ago. It is tough for beef and sheep meats to compete with pork in China at present. And the British released their March inflation rate overnight, and it eased to 3.2% from 3.4% in February, but remains slightly above the market expectations of 3.1%. It was their lowest rate since September 2021, primarily driven by a slowdown in food prices. The US Treasury 10-year yield is now at 4.59% and down 7 basis points from yesterday, and the price of gold will start today lower by $22 from this time yesterday, at $2,372 an ounce. And despite continuing Middle East tensions and uncertainties, oil prices have dropped a sharpish $2.50 to just on $82.50 a barrel in the US, while the international Brent price is down to $87 a barrel. Rising US crude stocks as our economy gains energy efficiency is behind the shift lower for oil. And the Kiwi dollar starts today at just over 59.1 US cents and back up 30 basis points from yesterday. Against the Aussie, we're firmish at 91.9 Australian cents. Against the euro, we're also firmish at 55.5 euro cents. That all means our trade-weighted index starts today at just on 69 and back up 20 basis points. And the Bitcoin price starts today lower at $61,348 and down 1.6% from yesterday. Volatility over the past 24 hours has been very high, though, at just under plus or minus 4%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.